Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today in our call, we have CEO Gordon Deans from Aurora Solar Technologies. Aurora Solar trades on the TSX Venture Exchange under the symbol ACU and on the OTC under AACTF. The company is trading at 24.5 cents with roughly 144 million shares outstanding, or about a $35 million market cap. I'd now like to hand it over to Paul Andriola.
Thank you so much, Trevor. Always good to have Gordon back. He's a veteran on our show here, so good to have him here. And it's been a while, so Gordon, we're looking for an update. But for some of those that aren't familiar with Aurora, let's make sure we cover all the bases and get everybody up to speed. You've brought a presentation with you, so we're going to hand it over to you and just let you start your presentation.
All right. Well, thank you very much, Trevor and Paul, and really glad to be here speaking to everybody and provide you with an update on the progress we've been making over the last little while particularly with our Insight product, which we've been working with lead customer on, and we are now preparing to introduce it more broadly into the market. I'm going to share my screen here and the PowerPoint presentation, and I will go through that. For those of you that are not familiar with the company, it'd be a bit of an introduction to the company and or a refresher for people who are familiar but haven't looked at us recently. And I'll bring in updates as we go through the slides as well. So without further ado, I just have to get myself technologically going here. There we go. All right. So just to verify, Paul, you can see a slide that says process control for profitable solar manufacturing?
We sure can, yeah.
Okay, so I'll go into the full screen mode. And last time I did this, I needed to switch between this and. Are you seeing the full screen? Or are you seeing the
no,
presentator version? Okay.
Yeah, presentator version. I think we got here.
Yeah. So that happened last time as well. So is it better now?
Perfect.
Okay. Great.
Rock and roll.
All right. Now we're technologically up to speed, so I'll get going. All right, so as always, there's an eye test chart here. Remind you that this contains forward-looking statements, and if you want the details on this, the presentation is also on our website. So for those of you that are new or need a little refresher on Aurora, I won't go through all the details on here, but the main thing is that what we do is we provide quality control systems and to companies that make solar cells, and solar cells are the precursors to solar panels. I'll get into that a little bit in a minute. And the purpose of this is to increase the yield within those plants. In other words, increase the profitability of their manufacturing operations. We have a large installed base of existing products, which are instrumentation systems throughout East Asia, primarily in China. And we're launching a new subscription-based software product we call Insight, which is actually looks at the manufacturing plants end to end and helps in real time the engineers and the operators to be able to get the most out of those fabs. That goes right to the top bullet in this slide here. All right. So we have an experienced and quite capable leadership team. It's going from kind of the top left-hand side here clockwise. Myself, I I'm an engineer by training. I've been involved in both Fortune 500 and smaller companies, public companies, in a variety of growth and turnaround situations. Kevin Dodds, one of our directors who's also active in working with me on forward-looking and strategic matters with respect to the company's development. He's a successful senior executive with a financial background, and has helped grow companies in engineering and other fields, and particularly in China, from very small to very large as well. Wei Deng is our head of sales and the general manager for Asia. And he's a native of Beijing and has done business development and product sales in a variety of companies as large as Microsoft and as small as a number of startups, and currently is the right-hand man in Asia Pacific region for us. And Johnson Wong is widely known within the industry, has an excellent reputation as initially a researcher in the field of solar cell design, and now as our head of our director of technology within Aurora. So there's lots of others who are also contributing here, and you know, there's not enough time to go through the expertise and capabilities that we have in the company overall. So for those of you that may not be that familiar with the solar energy field, this is an industry that is growing at about 25% a year and has been growing like that for 2 decades. And actually, with recent announcements from President Biden in the US, it's poised to accelerate its growth. The expectation is that 40% of the energy produced in the United States will be produced by solar by about the year 2035, based on recent initiatives and announcements from the White House. And that's only one country in the world. I mean, it's a big one, but there's also China, who has a major program for this. Europe, which has been a long-standing area for bringing in renewable energy, led by solar and wind energy. So we expect to see that 25% growth continue as far out as the eye can see, and perhaps even accelerate as well. So this is what we're working within, is a very high growth, exciting industry that's moving forward at an ever accelerating pace. Our market within that overall industry are, as I said earlier, are the makers of solar cells. Over 30 billion of those are made per year and growing. And in order to sustain the growth, and as I'll describe in a minute, also maintain profitability and move forward in terms of the capabilities of these products and maintain a competitive edge, these companies are continuously spending money on expansions and upgrades of their plants. The annual CapEx last year was about 5.5 billion, and our addressable market is a bit less than 10% of that. Now, some of you have probably been thinking, okay, he's going to explain what a solar cell is, so I'm going to do that now. When you look at a solar panel, which would be on the top right-hand side, you can see a number of units in there that look like squares with edges lopped off or rounded. Those are the cells. So a solar cell starts with a silicon wafer, which is sawed from an ingot. And that silicon wafer, which is about they vary in size, but they are they're roughly range from about 6 to 8 inches square, or if you're wanting to be metric, 156 to 210 millimeters square. And these are what are transformed from just a raw silicon wafer into an energy producing unit, which is what you see at the bottom right-hand side. And then they're wired together in the panel. So the panel itself, or the module, is a means to be able to frame and house the solar cells, but the solar cells are actually what promotes, or what generates the electrical power. So the solar cells themselves are really the core of where you are trying to get the value, and they're the most complex part to manufacture as well in this value chain. The need that we address is that these companies are generally operating on very thin profit margins. So if you see the pie chart, you can see that the raw material cost is more than half of their costs in the manufacturing operations. That's those silicon wafers. And then the manufacturing costs themselves, they obviously they will scale along with capacity, and then you're left with profit. Now the profit itself is something where they're continuously having to chase that just to stand still, because there's been about a 10% reduction every year in the per watt selling price. So if one of those solar cells that you can see on this picture generates 5 watts when it's tested today, a year from now, and it'll be still producing 5 watts, but it'll be selling, the per watt selling price will be 10% less. So they have to, in order just to stand still, continuously improve the power output of these cells. So not only is the throughput and the number of units important, but also the amount of quality or power generating capacity on a per unit basis. And every single solar cell is tested when it's finished. Every single one of those 30 billion cells a year is tested under standard test conditions to determine its standard power output. So with this, what you've got is you've got 2 things going on. One of them is that they're having to do this continuous improvement just in order to maintain profitability. And with what are typically 15 to 20% gross margins, they need to find ways to actually open up or increase their margin when they've got these challenges with respect to this raw material cost primarily. So they can do 2, basically they can address this by improving their plant operations so they get a higher percentage of higher power generating finished goods, which is what we address. And the other areas are cutting better deals through the supply chain and being efficient with respect to their manufacturing equipment as well, which we also address as well with our products. The approach that we use to address this is all around collecting data and making effective use of that data in order to optimize their operations. So measurements, collect the data. Our measurement instruments like the DM series that we've sold for a number of years now that are shown at the bottom right-hand corner of the slide. Other instrumentation, the testing that's done at the end of every production line is standard built-in tests, and those are provided by primarily by 2 large suppliers, one of whom we have an arrangement with for our Insight product that we'll describe later. Then make the measurements, which are numbers, turn them into something that people can actually use. How are these related to how each piece of equipment is behaving? And then finally, control, which is how can you get the most out of the equipment? What do you need to do in the way of tuning it, finding faults quickly and rectifying them, and making sure also that what you're doing is scheduling things like maintenance at the optimal intervals in order to reduce downtime. And finally, any kind of experiments or optimization of designs or recipes in the plant, make those as efficient and quick to implement in order to generate the results that yield better results at the end of the line as quickly as possible. Currently, the way this is done ranges from using in-house talent and systems that are built in order to be able to take a look at various manufacturing equipment instances in the plant, and various manual methods to analyze information and run experiments and try things out. What I'm going to get into now is I think the exciting part for the company and its growth in the market, which is what we did in order to supersede these laborious, slow, and frankly not very reliable methods to be able to get the most out of your manufacturing lines. And that's what the product that we call Insight, which is our software as a service product that we're just introducing. So this brings together the monitoring within the plant, in other words, the data collection. So it makes use of the data. It's not a data collector on its own. The ability to be able to detect events and isolate their location. So with that, we use tracking of material through the plant, which is supplied by third parties and is a part of modern production lines. The ability to be able to use data mining techniques to actually figure out which pieces of equipment may be not behaving as well as others, why they're not behaving as well as others, and provide guidance on how to bring them up to speed, and also find events or faults that occur from time to time, which are often very, very difficult to isolate and to be able to diagnose. And then finally, a common means to be able to report and communicate amongst various engineering groups within the plant. This also in itself is something that we find is very ad hoc and often contentious. In this sense, the product provides a common base and a common means of communicating that's based on data and not opinions and intuitions. The result of this is that because the system can allow the users to not have to use a lot of labor and also impact throughput in the production line by running diagnostic tests and experiments that actually take some of the plant offline while they're doing that, is that you get increased revenue. Your throughput is higher. So that's the number of finished goods that are produced on a week-to-week, month-to-month, and year-to-year basis. And the other factor is that because degradations in performance are isolated, identified, and rectified more easily without impacting the throughput, this means that the percentage of higher power producing solar cells increases at the end of the line as well. And we've actually verified this in the early tests that we've been doing with our lead customer. We announced back in the springtime that we were initiating an evaluation of the version of Insight we call Insight Essentials. We are close to the end of that now, and we have identified with them specific use cases and also the value associated with those, which ranges into for a medium-sized plant within the top tier companies, about $6 million to $13 million of reduced cost and increased gross margin by our estimates, and also based on what we're seeing at the lead customer site as well. So this is significant. So this isn't a product that you buy it and it costs you money and you use it. This is one where when you purchase it on a subscription basis and you use it, it pays back for itself many times over on a continuous basis, day in, day out, week in, week out. So that's the true value of this. Now, just before I go into this slide, I'm going to just describe a little bit about kind of where we're at on the evaluation. For those of you that are interested in what's really going on and maybe have some background in manufacturing operations, the methods that are typically used for being able to either identify poorer performing pieces of equipment within a plant, or to be able to diagnose where a fault is typically what will happen is that there will be some observation of degradation or lesser performance in a solar cell plant at that tester at the end of the line. You begin to see the curve of efficiency trending downwards. And maybe the distribution from highest efficiency solar cells to the lowest efficiency solar cells will start to spread. So this stimulates the engineering team to say, okay, we need to conduct an investigation to determine what the problem is. In that case, what they will do is they will oftentimes restrict the movement of the raw material through the plant to where they believe, based on their experience, the problem may lie. And then they will split that those dedicated batches of raw material that are partially finished at the point where they think the problem lies into the different pieces of equipment. Then they'll, again, consolidate them through to when they're finished. Then they'll do an analysis offline of what they saw at the split where they did the testing and reach the conclusions. So you can imagine this is laborious. It reduces throughput because what you're doing is you're taking typically your best line through the plant, except where you do this split into the different pieces of suspicious equipment, and reducing the throughput there while you do these special runs. And then what happens is you have to perform some analysis, which is laborious and time consuming offline. in the meantime, the problem is continuing and continuing and continuing while all that's happening. So not only are you hoping that you find the right place and you can detect the problem, but you're also placing a bet on this in terms of reducing your throughput and therefore reducing your revenue a little bit, and also tying up a lot of expert labor on this at the same time. The other problem with this, other than what I just alluded to, is that you don't really know for sure whether this is where the problem lies. And you also are doing this on a very, very tight time frame sampling basis. So there's a lot of guessing, otherwise known as intuition. And you may or may not actually observe the problem, particularly if it's intermittent. And you just don't know that ahead of time. What Insight does instead is that we are continuously gathering data from those tests at the end of the line and from the wafer tracking systems that tell us what material flowed through what parts of the plant. And you don't have to touch anything. There's no special runs required. We just use data mining on that data, map it back using the wafer tracking information and we can identify which pieces of equipment over what period of time have been performing in which way. And we have specifically set up alarms and tagging in the system using AI techniques that will identify where you've got suboptimal operation and also ascribe causes to that as well. So this goes far beyond what is typically done in terms of not only the confidence that you're actually picking up the right things, and you're picking up things that you may not be observing directly as well, but also in terms of being able to ascribe a cause and use this on a data-driven basis. So you're not relying on somebody's intuition, which that intuition can walk out the door anytime if they decide to retire or take another job. So this is also built right into the company's knowledge base and know-how in terms of information and databases and the techniques associated with it. So this addresses multiple pain points for your average chief operating officer in that sense. It addresses the how do I manage risk? How do I know that the team is doing this properly? How can I convince the engineers responsible for each step in the process that there actually is an issue and they need to act on it? And also, finally, the bottom line is that this is actually identifying and helping to get all the suboptimalities and faults out of the system, so you're getting the most out of the equipment that you've invested in your plant. So on this chart, that's why we have all the tick marks on those items. And the other companies are primarily companies that are interested in generating the data, and they have good products associated with doing that, but they don't provide the value add to turn the data collection into actionable, money-generating information and guidelines on how to do things. So I mentioned earlier that there's two companies that are the primary suppliers of the testing equipment at the end of the line. These are, one company is called Wave Labs, and the other one is called HALM, which is an acronym for the founders, HALM. And Wave Labs has an interesting technology in their testers that allows them to be able to generate some additional data that we can use in Insight that is not normally supplied when the testing is done by simulated sunlight. So it's not normally in the simulations. So back in the springtime, we also announced an agreement that we have with Wave Labs to be partners both in terms of technology development and also in market entry. So we are now well down the road on both of those with Wave Labs. We're preparing now to bring the market, I should say bring Insight from the lead customer into a first customer within China. So we're actually in discussions with one company after we'd introduced Insight at a trade show back in June in Shanghai. So that's well underway. And we're also preparing to also start market entry activities in China with Wave Labs in a more general sense as well. So you can watch for that. We'll be having some news on these things as they develop through the fall and into the early winter as we work our way through that as well. So we're on track. for this. I am pretty close to being able to take the today marker that you see up on the top left chevron here, and move it a little further and start to get it into close to the phase 2, which will be coming up as we move into about the middle of 2022. So one of the things that I want to also tell you about is that because we have an installed base of systems in the market, and these are our DM measurement instruments, we now are in and very familiar with day-to-day operations in 6 of the top 10 cell manufacturers in China. So we have people on site in those locations. We are in contact and dealing with the engineers pretty much on a daily basis in these plants as well. So we're not just bringing this in cold into the market. We have the ability to be able to bring the product in. Our sales model is to start with evaluations and then convert those to subscriptions as the customer sees the value. And we have a smooth path to do that with many of our customers as we move forward, because of basically seeding the market with our measurement instrument products. So this goes hand in hand with our work with Wave Labs. And as you can see in the bottom on the left-hand side, our sales partners as well. So I pretty much already described the Wave Labs partnership. So in the interest of time, I'm going to skip this slide. If anybody wants to look at it, it's of course available on our website. One thing that you won't see much of on the website is that we also had, after our recent financing that was led by Stifel Nicholas, we had them prepare a benchmarking analysis for us. So that's the result. This is the result of that benchmarking analysis. And this is, I think, key from an investor perspective, is the rating for the company and the valuation in the market currently is based on a company that builds and sells hardware products that are sold into capital expansions. So these are one-time sales that rely on the expansionary growth in the market. This is very typical of many companies that provide equipment for manufacturing plants. However, with the introduction of Insight, our purpose of that wasn't just to be great engineers and help our customers to be able to see what was going on in their manufacturing plants better and to do things about it, but also to position us as the beginning of a broader spectrum of products that covers both the SaaS and the systems side of the instrumentation and control systems for manufacturing, and the associated hardware products, which are effectively the data generators. So in a sense, this puts us into the same sphere as companies that produce business intelligence systems. In this case, it's business intelligence around the manufacturing plant operations and results as well. So Stifel did some work to look at comparables, probably for many people involved in the area, say, of semiconductor manufacturing. KLA, which is the second from the left-hand side, is the most notable company here. But there's others that are pretty well-known names, like Teradyne, for example. And these are companies that have a combination of yield management for manufacturing or software systems that provide that kind of intelligence, and instrumentation and control hardware and software as well. So you can see that this brings the multiples, the typical multiples, up to a higher level. And that was part of one of our objectives for the company as well, as we start to make headway with Insight in the market, is to get the company re-rated and change our valuation and move it up higher, commensurate with these companies. So to sum up, we're addressing a large and growing market, and I mean really growing, and it's going to be huge. We are leveraging our market presence, as I described earlier, with our embedded base and our people in the largest market in the world, which is China, in this industry. The Insight product is targeted not just to set a standard for quality management within the solar industry, but also to give us that acceleration of the market capitalization and value of the company commensurate with the nature of the product line. We have a globally recognized team in the industry, and the board and leadership have a track record of creating value for companies large and small. All right, so with that, I'd like to thank you, and happy to answer questions.
Fantastic. A great job, Gordon. Appreciate that. I think that covered a lot of bases here. You know, we've been following the story for a number of years now, and clearly, you know, you were thrown a curveball with COVID last year. Tell me what, you know, we're sort of seeing a second wave of COVID right now, and you know, the first wave, there were a lot of travel restrictions and a lot of issues around just being able to get on the ground in China. What's changed, if anything, and how do you see COVID affecting your business over the sort of the short term here?
Well, I'll describe kind of what we have done and what we're doing now as we look ahead. First of all, I think one needs to be realistic about this and operate under the assumption that there's going to be some friction with respect to business travel for some time to come. So rather than sitting around and looking at your watch or your calendar and waiting and saying, okay, well, sometime soon everybody's going to be back to the same way they were at the beginning of 2020, we have done two things and are doing, I should say we have done and are doing two things. One of them is we are building up our team in China by not to just basically continuing the service capabilities that we have, which have served us well for what I would describe as kind of the normal day-to-day operations. But we're also starting to recruit and build up higher level capabilities there from an overall business development, marketing, and technology development point of view as well. So this is a reflection of the expectation that we're going to need those people on a sustained basis. So first of all, more senior commercial and business development people. What we've done so far is that we've taken one of our most senior application engineer, and we promoted him and put him in a business development role for Insight. He's got a background in process control and plant operations. He was previously at a couple of jobs before us, a process engineer at one of the largest solar cell manufacturing companies in China. We're also engaging experienced people at a senior level in the field of process control for industrial plants, and bringing them in to work with our solar experience team in China as well to augment that business capability there. The other thing that we are doing is we're building up much more strength with respect to how we actually automate and have the ability to be able to remotely work with the customers over the internet with our products. So we can actually dial into our products, we can work with the customers, we can see what's going on with the products at any time virtually as well. So this is something that I think is going to stand us in good stead even after business travel resumes, because it allows us to be able to work with customers in real time on how best to use the products, any troubleshooting or upgrades or anything like that that we need to do without having to have quite as much coming and going in terms of travel back and forth.
Now we're also hearing so much about product shortages, chip shortages, things like that. Are you affected by any product or raw material shortages?
Not like the auto companies seem to be. Mm-hmm. We have had some slowdowns in our supply chain from some of our suppliers, not so much at the very bits and pieces level, but more integrated systems like printed circuit boards, board-based computers that we use in the products and that kind of thing. But so far, it's been commensurate with what has been the normal range of timelines. It's just been shifting more to the longer end of that range. With Insight, we don't expect that to be a problem because it's a software product, and what we run it on are standard PC computing platforms that we can source from a variety of places, and we haven't seen any particular issues with that. It's really for the instrumentation products where we need some specialized components where we need to keep an eye on it.
Now, I mean, we all know how fast the solar industry is growing. You mentioned a couple of metrics there. Maybe give us a better idea of, the number of facilities that are out there right now and how many are added, or give me some sort of metric to show physically how fast this industry is growing, especially in China.
The number of facilities is really hard to pin down because it's like a curve where you've got a small number of really big ones, and then as you start to get to smaller and smaller sizes, the numbers start to go up and up and up and up and up, and we're not really in a lot of them. A lot of the smaller ones, we're in most of the larger ones. So the thing I can tell you about is that there is currently about everything's measured in watts in this industry. So there's 200 gigawatts equivalent of manufacturing capacity for solar cells that's actually running in production, roughly. And the sizes for the big players, the top 10, they're typically running plants that are in the range of 5 to 10 gigawatts each. The next tier down, we're involved in discussions and Insight with one of those. For example, they're looking at putting it into a plant that's going to be about 2.5 gigawatts, and for them that would be normal size. So they're about half the size of the smaller range of the top 10. Where we have the current evaluation wrapping up pretty soon, that's just under a gigawatt of size. So these represent the size ranges. So if you were to take the 5 and divide it into 200, you'd get about 40 plants of meaningful size, and that's about the range where we would be expecting to target who we're going into with the Insight product, and also with the measurement products as we move ahead.
Gotcha. And okay, so we know that you've been working on an evaluation, call it an evaluation program with at least one customer. What do you anticipate the sort of sales cycle will look like once you've got the data you have? And are ongoing evaluations going to be needed? And I would assume they'd be shorter as you go, but give us a bit of a sense of what you expect it's going to look like in a year or two.
Well, I would say probably for the next year, the evaluations are going to be needed. Mm-hmm. We would expect those. We're targeting, anyways, those to be in the similar range to the one that we've done with the lead customer, who happens to be in Taiwan. And in that case, we'd specified a range of 3 to 6 months. It's gone towards the longer end of that, because what we've found was we got a lot of learnings from them, which allowed us to refine the product even more. So we chose to do that, and do that evolution of the product, because we felt it would give us a stronger kickstart in the market in China that way. In China, we would target 3 months. And at that point, all things being equal, is that at that point it would be kind of okay, so you want to continue, you have to purchase a subscription. If you don't want to continue, then that's fine. Obviously we would be picking and choosing at the early stages to make sure that the conversion is successful. You've got to allow for a period of getting the customer used to this, because it's a novel product. They're going from manual methods and what I described earlier in terms of trying out special runs to see if they can pin down where a problem may be, or running experiments and some intuitive work, to a much more disciplined and data-driven approach, where they need to be using this tool. It's easier for them ultimately, and more reliable. but we have to get it built into their day-to-day operations. So there's a period of time where they get used to it, a period of time where we iron out any things to do with integrating the data from the wafer tracking and the measurement instruments, and then training and working with them very, very close on a almost down to the individual level to get them using it on a daily basis. After the way things work in this industry is after you've got 2 or 3 cases of people doing that successfully, the need for evaluations will diminish greatly because there's a lot of word of mouth in this industry. And generally speaking, if people find something useful, then they all jump on it. A really good example of that is the current cell technology that is the mainstream, which was not the mainstream 5 years ago. When the first users started being successful with it, then there was a giant amount of movement towards mothballing old plants and building new plants that use this technology. And they didn't really need to mothball the old ones, but they needed to change out some of the equipment. And this happened extremely rapidly because by that time it had been proven by somebody else. So if I do it, then I'm going to get my bonus, and I'm not taking any real risks either. So we expect the same thing to occur here, so that we, anticipate that it'll take into mid 2022 or so to start to get to that point. And then after that, we just need to be prepared to do a lot of shipments of this product.
I got to imagine too, I mean, you've got the evaluation program going on right now, but this company and so many of the larger companies have multiple facilities. So if it works in one facility, it's likely going to spread pretty quickly in the other facilities within that organization.
Yeah, I think that's correct. But one thing I will mention is that each facility is a little different. It's interesting, in the semiconductor world, Intel pioneered something they call copy exact, which is very typical. In other words, how you walk into some chain stores and, hey, I think I've been in this building before in this store, but it's not in the same city that I remember. They do that, right? So they're exactly the same down to the nuts and bolts. Solar doesn't do that. So they're not totally different, but they are, the period of a few months between building one and building the other, they could have different equipment from different suppliers, even though they're running the same sort of processes. So there is a little bit of that, but generally speaking, if things work well in one plant, then they all talk to each other and say, okay, well, let's stick with this.
Gotcha. Now you've had more time to sort of work with your client. Pricing. How does an investor look at how you're going to price your product, and are you sort of more refined in what that looks like?
What we're looking at now is we've done a standardized model of what we believe the pro forma value of the product is for a given size of plant. And the pricing we are doing is we're going to be doing the subscriptions on a per tester basis. So let's take this 5 gigawatt plant, which produces about 900 million solar cells a year. That will contain around 28 testers. So on a per tester basis, you would be licensing in site. So if you've got, 2.5 gigawatt plant, it may be 14 licenses. If it's a 5 gigawatt plant, it's 28, and so forth. And with that, then you pay a fee, which we price monthly on a per tester basis. But we're going to bill quarterly or yearly. This is a standard B2B SaaS model, is that you quote the prices on a monthly basis, but that's too frequent for the accounting department, so they want to pay quarterly or annually. So that's the way it's done. And the pricing works out to about 15% of our pro forma value. Now, we will work with the customers on this, and there's certainly in the early days, there'll be some negotiating on this based on, what we find the market is willing to pay for the product as we move it into the market. It's novel. So, there's a little bit of that. And this is one of the reasons why we also are starting with a fairly basic product, enough for people to say, yeah, I want this and I need it. But not with all the bells and whistles. That goes into phase 2, so that we preserve pricing power as well as we move in to the market more fully. So our expectation is that we should be able to generate that $6 to I believe it was $13 million in added value for the customers on an annual basis in that size plant. So we're going to be looking at roughly 10 to 15. 15 is the list percent of that as the subscription fee for the product for the basic capability. And then we'll introduce, as time goes on, we'll introduce tiers.
New bells and whistles and new improvements and whatnot.
I mean, we're blatantly copying other SaaS models for things like customer relationship management systems, other business intelligence systems, and so forth. My view is that why try to invent your own way of billing and pricing when you can just copy somebody who's successful?
Absolutely. Don't fix it if it's not broken.
That's right.
Just remind everybody, if you got some questions, and we do see some questions that are already in the chat function, use that chat function, write out a question. I'll do my best to ask Gordon. Gordon, you raised a little bit of money several months ago. Maybe give us a sense of where your balance sheet is and what do you think that does for you? Do you think you have what you need to sort of do what you need to do?
Yes. So, we've got good runway right now. As of our last financial reports, we had roughly $5 million in the bank. This allows us to get into the market with insight, and we're also anticipating a buying cycle coming up early in the coming year. It's been a little quiet recently because from an expansion perspective, there's been bottlenecks in the upstream part of the value chain. Shortages of polysilicon and wafer supplies. That's being remedied. There's actually billions of dollars going into capital expansions at that part of the value chain, and the expectation is those things are going to be coming on stream later this fall and into the early winter. And the expansion plans that have been parked have not been canceled by the major players. They've just been delayed. Those will be reactivated. And we're actually already getting some early feelers on these things.
Fantastic. Let's jump over to a couple questions from the listeners, and I've got one here, and I actually saw this article recently, but recently Sydney-based startup SunDrive achieved efficiencies of 25.54% for silicon cells, which is by far the highest in record. This company is looking at an alternate to replace silver being used in solar PV cells. Question is how Aurora Insight product is different from SunDrive's product. I mean, your product is very different, but maybe let's talk about that. And do you see that having an effect on how solar cells are produced and the effect on your business?
Well, recall that I mentioned earlier in the presentation that there's roughly a 10% reduction in the per watt buying price for solar cells. So this is one of the things that is both a benefit and also a challenge for these companies. Because the price has been going down, and it's been doing this for a long, long time. This is why you have such a growth rate, because more and more locations, it becomes a good payback to put in a solar power plant. That accounts for the growth in the industry. But at the same, by the same token, what they need to be doing is they need to be improving what is the actual power generation or the efficiency percentage-wise of their solar cells. So most manufacturing plants, they produce an average efficiency in each of the units of about 22%. So 22% of the actual energy in the sunlight is converted into electrical energy by the solar cells. And that's actually pretty good. It sounds like not that much, but the theoretical maximum for the current designs is about 29%. So 22% is pretty good. And when I started, it was 16 was state of the art. Now 25 is really good. I mean, little tiny increments in this add up because of the huge numbers of these things that are made. And not that familiar with SunDrive themselves because we focus on the large players, not the startups. Mm-hmm. But we do keep an eye on the technology developments. And the way Insight works is because it uses data that's generated by the tests at the end of the line. The tests are uniform, no matter what the cell technology is, whether it's uses silver contacts or copper contacts. SunDrive is proposing to use copper. It still comes out in terms of what's the voltage under standard test conditions, what's the current under standard test conditions, and other electrical parameters that are uniform and consistent across all the designs. And then what we do is we translate those into where any suboptimalities are in the process steps based on the wafer tracking information, which is also consistent as long as you're using wafer-based technologies to make your solar cells. So we're pretty, to use a cliched word, future-proof with Insight. There will be some adjustments based on certain characteristics of exactly what the equipment is, but that for us, we're on top of it.
Mm-hmm. I really like where you guys are positioned in the food chain, because it's sort of the old adage, you're providing shovels to the gold miners. If the product gets commoditized and solar cells continue to get cheaper, theoretically there's going to be a lot more solar cells produced, a lot more testing, a lot more lines, a lot more facilities that are going to require the measurement systems and the capability of making sure these things are all being, manufactured properly. So you guys are well positioned in any sort of change in technology.
Yeah.
Another question we've got here is in regards to Taiwan. Now, you mentioned you're working with a customer in Taiwan, but clearly we're starting to see some issues politically. Tensions between Taiwan and China. Do you have any concerns around that? Any insight into? Pardon the pun, any insight into what might be happening down the road there?
Well, like everyone else, I read the newspapers, so I'm familiar with what the challenges are. But let's bring it right down to kind of at the micro level what it is that we deal with and what we're doing. So the lead customer, this company is a leader in technology, and they're also a pure play cell manufacturer, which is nice because this gives us a well controlled sense of exactly how well our products are playing and how they're actually creating value for the customer, because they sell the solar cells directly. They don't just use them in making modules, which many other companies do. So we can see the direct effects of that. In the grand scheme of things, we have one customer in Taiwan, and that's them. And they're not in the giant category. They're what I would describe as very high quality technology leaders, but they're selling into just the pure play module makers. So I don't want to throw anybody under the bus here, but regardless of what happens, it's a small part of our business. We place intense value on this company because they helped us with our measurement products as well. So every high-tech company should have a customer like that. You need them, but you don't rely on them. When you sell into the mainstream, they're the ones who don't want to do the kind of bleeding edge work, but they're the big ones, the ones that say, okay, we want you to try it out with other people first.
Gotcha. So another question's come in. It says, what's the competitive advantage that ACU has over competitors with Insight? Now, my understanding is there's really no competition with Insight other than sort of the standard sort of, laborious manual way of testing these things. But maybe give us a sense of competitive advantage or any competitive landscape that you can tell us. And then the follow-on question there is sort of what stops somebody else from being able to sort of copy your product? And is your advantage the fact that you've got so much hardware installed already?
So the do-it-yourself is really the competition. Mm-hmm. And people will say, "Oh, well, that's not really competition." Well, in fact, it is real competition because it's incumbent, and it may be suboptimal. There are cases where people have spent a lot of money to make it better, which I'll get to in a second. But nevertheless, it's what people are used to and they're comfortable with. So you have to displace that incumbency by providing, a much greater sense of value for what you're bringing to them. The do-it-yourself ranges from what I described, which is by far the most common way of doing things, which is based on the very manual methods of sampling, running experiments, and that sort of thing. There is one company in the industry that put in instrumentation all over the place and spent a ton of money on it. Made it very similar to a semiconductor plant, actually, and it was because at the time they developed this approach, their chief operating officer had come from the semiconductor industry, and the challenge with that and why nobody else has done it is it's just too expensive. Remember I said to you they're running 15 to 20% gross margins. Mm-hmm. There's the odd one that's better than that, but for the most part, these instruments cost millions and millions of dollars per line, and then you also have to have a team that can take all the data that comes from those instruments and parse it, do the statistical analyses on it. And this is not something that you just hire somebody with a bachelor's degree in electrical engineering or math to do. These are typically people with PhDs that are doing this kind of thing. Then you have to justify the maintenance and salaries on an ongoing basis for that investment as well. So there's only one other company we've worked with who did that on one of their lines, and they said they'll never do it again because it's too expensive. Mm. So that's the range of competition, from the intuitive, very manual method to the expensive, replicate a semiconductor fab, which by the way runs at 50% gross margin or better method of doing things, and make no money. Yeah. As far as upcoming competition, let's put it this way: if you're successful with something, there's absolutely no question you're going to face competition. Sure. So we anticipate that. Where we have advantage isn't really so much on our the installed base gets us the advantage of being able to get into the market and knowledge of how to do so, but it doesn't protect us. What protects us is the way that we did the data mining techniques. These are trade secrets. There's things we did in there that other people don't know how to do. One of the things that we put a lot of time and energy into was making sure that we got the best people like Johnson Wong, mm-hmm. Who understand exactly how the innards of the solar cells work and how that relates to the behavior of the process equipment. So we're the only company that I'm aware of that's looked at this from an end-to-end perspective, and also taken the data mining approach based on the data that's generated when every single solar cell is tested. So we have a proprietary scientific and mathematical algorithm advantage that others would have to replicate. Mm-hmm. And ultimately, over time, you'll become the incumbent also because and the dominant company in the market is because you set the standard. And that's another one of our objectives is, as I said in my summary in the slides, is in Insight and how people use it will become the standard for this kind of stuff, because we'll supersede the manual method And then when we control the standard, we're like Microsoft.
Absolutely.
It's just how it's just what people use and how they do things.
Yeah. Yeah.
So it's not to say there won't be Macintoshes and Linux systems and all that stuff. So, I don't model in the business that we have 100% market share.
Yeah.
I just want to get most of it.
Yeah. No, fair enough. And then just to that, the other question is, what protections do you have, if any, on your intellectual property?
So the software itself, we protect and encrypt the core algorithms. To be honest, if somebody really went to town, if a government agency, government bodies, they could probably crack the code. So the other thing you need to do is you need to keep innovating and staying ahead of that. We don't patent the algorithms, and we won't, because patenting them is just telling people how to copy.
Do it, yeah.
And we also, on that sense, we also copy protect using hardware dongles so that people can't just kind of copy and replicate the product as well.
Fair enough. Okay, well, listen, we're sort of close to wrapping it up here. A question we like to ask everybody now is, where do you see the business in 5 years? Look forward and tell us what it looks like in 5 years from now.
So I'll put that in terms of what the roadmap is for Insight. So we're bringing Insight into the market now with our current instrument beside it, the DM. And the way that we're introducing Insight is that we're only using the data that's generated by the end-of-the-line testers and the wafer tracking system. However, if you really look at this as being sort of the centerpiece or the core of a family of products, you can say, well, what Insight does is it uses data in order to produce actionable information for the customers. So how do you make that information better and easier and more informative in terms of what actions should be taken? Well, you improve the quality of the data coming into it. So this is where you're starting to link in more instrumentation occurs. So there's instrumentation at the end of the line, which is the cell testers. So you find out what's going on when the goods are finished and how that maps back upstream. But also there's instrumentation that is at each step in the process. And that tells you exactly what's going on in those machines in real time. So this starts to get you into being able to actually control the variations in those machines exactly as they're occurring, rather than optimizing later on or troubleshooting later on, which is what you do with the end of the line data. And so those are the next steps. So it's building out a portfolio of data sources, as well as using those to provide more and better features that are more value added and therefore generate more revenue for us and more value for the customer in Insight. So it's the growth of those two together that we see. So in 5 years, we would expect to see the connection of the DM instruments directly into Insight and the use of those in Insight. We would expect to see the work that we're doing with Wave Labs in terms of generating more additional data at the end of the line that tells us more about what's going inside the solar cells, which gives them better diagnostic capabilities and optimization understanding in the different steps in the process, and the addition of some additional instruments. So that's what you would see in terms of the product portfolio and the marketing of them. In terms of how this affects revenue, 5 years is a long time out, especially for a company in its early stages of development in the market like us. But I would see us, growing by, as we start to build the Insight business, tens of millions of dollars incrementally year by year as we look ahead.
And I'd add high margin dollars, because this is ultimately software and it's a SaaS business. So this would be very highly profitable revenue, right?
That's correct. Like the margin roughly on the existing products is about 50%. It varies depending on the ratio of sales to support and so on. So that's a hardware business margin, and not a bad one for a hardware business. With the software, the margins run, software margins run typically 85–90%, sometimes even higher, depending on the amount of associated material that you need with them.
Mm-hmm. Yeah, fantastic. And then any sort of metrics or other catalysts that we should be watching for that sort of indicates that you guys are executing on your business plan?
Well, we'll be announcing as we move along, in things that are, material in the market. The things I think that are probably going to be most critical, and certainly what I'm looking at myself, is number one is that we get more of these. Our first evaluation going in the actual mainland China market. So that's a big one. And then, conversion of that and subsequent ones, a reasonably high percentage into subscriptions. The other things on a commercial side that we would be doing in terms of promoting the product and getting press in the industry for it as well. So I'm not going back to the early 2000s talking about eyeballs, but I mean, things such as we've used this and we got these results out of the usage of it. So, tangible things like that. Those are the main things. Obviously revenue, which will come in our quarterly results as well. But at this stage, the main thing is that we're what we're trying to do is we're moving towards taking that hill. Right. So you want to see that the troops are advancing towards it. That's the near term stuff.
Gotcha. And then just lastly, we always give you guys a chance to leave a key message, key takeaway. What do you want investors to walk away with knowing today?
Well, I would say this. We are pioneers in the solar industry, but we're building the business on proven ways of generating value in a variety of different industries, such as semiconductor manufacturing, pharmaceuticals, chemicals. They all went through this phase of going from early days manual ways of managing and running and operating and optimizing their operations to automating it and using systems that are very similar to in principle to what we're doing with Insight. So we're building on the shoulders of others who've been extremely successful. And our business is to be in the right place at the right time with that value add for our customers. And that's what we're doing. And we're also doing it in what is probably, if not the highest growth industry right now, one of the highest growth industries globally.
Agreed. Absolutely agreed. I usually ask website address, but I see you left the slide up here. So if somebody wants more information, they can look at, they just go to their website at aurorasolartech.com. I see Jake Boma here as a contact for IR. Anything else anybody needs to know as far as getting in touch with you guys?
I think this is it. Jake's the primary person for investor relations, and the main thing I think is that you'll see some news from us coming up. You can always go to our website for more information, and I can also give you an industry link for those of you that actually want to look at this from a more analytical perspective with the industry overall. www.pv-tech.org. So that's www.pv-tech.org. And that is a group that is they're probably the best group I know that actually looks at the entire manufacturing value chain in the photovoltaic industry.
Fantastic. Fantastic. That's going to help a lot. So we've been speaking to Gordon Deans, CEO of Aurora Solar. Gordon, it's always great to catch up with you guys. Good luck with all the efforts in moving this forward. And look forward to catching up with you in the hopefully not too distant future.
All right. Thanks very much, Paul. Really a pleasure to be with you today.
Thank you.